Good morning, my Teaserking family. How's everybody today? I am fine. The computer was sent back for hazardous material, whatever that means in a computer. So it's coming today by tonight, and I'll start work Monday. So you've got me one more. Well, you would have had me on the weekend anyway. So I went to our favorite gold and silver store, the coin store, and I got the silver at $30 an ounce. I bought 15 ounces. They're running out. They didn't have no gold. They had zero gold. So just an FYI, if you think, well, okay, now I'll buy gold. Well, where are you going to find it at? The only time he gets gold is when somebody brings it in and needs the money. So I need money. I got gold worth $2,000, and I come back to the store. That's how he gets his gold. He's not getting it from the mint anymore. As far as can you get it on a JM bullion or whatever, don't know. I mean, maybe you can, but maybe you can't. And that's been my whole bitch. If you wait too long, you're not going to be able to get it, and especially at these prices. He had a 10-ounce silver bar, and I got the 5-ounce rounds. So he's not getting in the regular Liberty $35 $1 gold. He's not getting that in. At least he hasn't been. So what he had was he did have the rounds, and he had a bunch of 10-ounce bars. So I got a 10-ounce bar and I got 5 ounces. Now, why both? Well, because I'm going to buy an ounce of gold with the 10-ounce bar, and then the 5 ounces is to buy groceries and stuff with. Now, again, it won't be direct; it'll be indirect. You're going to take the ounce. You're going to get whatever the currency is at the time, and then you're going to go to the grocery store, or you just have it in your bank and use your debit card. I don't think that, but you don't want it back in this. So you wait till this goes obsolete. Then they'll bring out a new currency, and they'll blame the Russians, and it's the Russians' fault. And here's the new currency, which won't be backed by gold either. So we're in the same situation. You didn't change. This hit the Titanic and sunk. And if they give you the new currency that is not backed by gold, it's already hit the Titanic, and it's already in sink mode. Thinking that you're idiots and don't understand that the dollar ain't backed by gold. It's not worth anything. So my guess is that's what they'll do. Or even if it's a CBDC, it's got to be backed by gold, or it's not going to work. It's going to fail. You have to have money backed by gold, period. That's what you need. So anyway, he's just running out. He has some other silver, I think Chinese, and I think Canadian or English, that you can get for the 35. But since he had the bullion was 30. Now, why he's still 35 on his other, I don't know. I go on eBay, they're selling for 43. So I don't really understand it. But anyway, that's your thing. Your inventory is shot. Now, maybe you can call this Liberty and Finance, the one I show you, where I hate the guy, but he'll have Alistair McLeod on or somebody like that. And you can order from him. Now, I don't know what is shipping, and he shouldn't charge tax, but if he charges tax or shipping, fuck him. Most places won't. See, that's where you get the problem. I don't know. Bobby will have to explain. Is there shipping on JM bullion, and is there tax on it, or if it's just spot? It really should just be. Well, I can see where they have to charge you for shipping because they got to get it to you. And even my guy, when I was in Alabama, charged me for shipping, but no tax. So we'll see. Otherwise, with my guy, it's hit or miss. Now that I'm going to start work Monday, I'm more apt to want to buy another 2 or 3 ounces of gold. The fake gold's down a little bit today, but we know that's fake. I'm going to show you Andrew McGuire Friday. Now, this is a good episode. He's got no bullshit on his. He's got no guests. It's a nice little 30-minute. Didn't I mark it favorite? I hate these stupid ads. I didn't favorite it. Okay. And I'm even going to put great show. Because I don't like the guest. I want to hear Andrew. So when he's just Andrew, it's good. All right. So, good show today. I think this is number 121. For you keeping score at home, highly advise it. We're going to look at it. I've got 2 timestamps that are very important. What the fuck was that? But basically what he says is it's all over. They're not going to be able to hold the COMEX anymore. It's basically gone. It's just ending. But I'll let him tell you that. But so anyway, good news. It's going to be much higher. And then he explains the difference. Like, well, as I've explained to you, what's different? We've heard this for 50 years. Gold going, silver's going up, up, up. It hits 50 and that's it. And then they do some bullshit. Why is it going to be different this time? And I told you it's bricks and the demand and everything else. And basically he gives you his story very similar, saying, look, this is what's different this time. This is why it's going to go, and it's going to go to thousands of dollars. Versus, yeah, we've heard that before, and it goes to 50 and it comes back. Yeah, that's exactly what everybody's leery about, but not understanding. But this time, you can't stay in this. You've got to get out of this. This is the key. And so you never had to get out of it before. 2007 and 8, the housing crisis was just the housing crisis. It was basically too many people buying houses that shouldn't have been with no credit, and they defaulted on it. Basically, interest rates went up. They couldn't afford it. They were all on variable instead of fixed, and that's what happened. So they all went down. And understanding that, that's totally different this time, right? And you didn't have the inflation you're having now. That was just about a housing crisis, right? So now you have this going out. Nobody wants it. All these countries joining BRICS, wanting the gold-backed currency. Don't kid yourself. Oh, there's no substitute for the dollar. Well, why not? The euro is more expensive. I know. I was just in Spain. It cost me 108 for the $100 euro plus a penalty because it's U.S. So don't tell me there's no substitute for it. Now, the euro is not going to last much more than the U.S. They're both going out. But don't tell me you can't use anything besides the dollar. Maybe because you needed to trade in it, right? So if I'm Switzerland and I needed to buy euro, I had to get US to do it, but now you don't. Now everybody's going, no, just use your currency to trade it. That's what's happening. That's really more the dollarization than anything else, is now Switzerland can buy British pounds as opposed to before they had to buy US dollars to buy British pounds. That is what they're doing to de-dollarize. We don't need US dollars anymore. And now it's like you're having you're opening up a store and you think you're going to need 20,000 pairs of Bobby Bow tennis shoes. And that's what you think you need because you got to get it for people in England and Europe and Asia. So you need all these tennis shoes. And now everybody's saying, we don't need your shoes. We're just going to use our shoes. And we're like, wait. So now we got 20,000 pairs of shoes, but we only have 500 people who need them. Oops, we got too much. That's inflation. You're giving them away. Well, that's what's happening with the dollar. You've printed too much. People don't need it anymore. People don't want it anymore. They'll use their own. Frankly, the substitute for the dollar is gold and silver, plain as the nose on your face. So why that would even be confusing to anybody, I don't know. So it's not a matter of you need you don't need the dollar anymore to transact around the world. And you can use your own currency, but at the end of the day, you're going to go to gold and silver for safety because, your own currency's been heavily, heavily printed, heavily inflated because none of them are backed by anything. So you can't just keep printing and think it won't hurt the value. It's like making 20 cakes. I only want one. The other 19 are going to sit there. You've made too much and the others have no value. That's a pretty good way to look at it. So, let's look at it in steak terms because I like that better. So I made 20 steaks. I got 3 people. Well, okay, I'll eat 1 steak. Maybe we eat 2 steaks. What are you going to do with the other 14 steaks? You're going to throw them out because, you put them in the fridge. They don't have the value because I can't eat that many. I don't need that. I've made too many, and I've devalued the steaks by cooking too many of the steaks. And that's basically it with money. Now, money you can save. You can put it in the bank, but you still have made too much of it. So the value of it is declining. And that's why I do the Titanic, because you've made so much of it, it's not worth anything. And you've made a lot for the world, but they don't want it anymore and they don't need it anymore. So now it's coming back in, and now you got this huge pile of money that nobody wants, and the value is dropping to almost zero. Well, wait, I can go and buy gold with it. That's what you do. You get out of it. So that's what I did. So yesterday I limped over there, got my 15 ounces, and he had no gold. I've never seen him with no gold. He had no gold at all, no ounces of anything. Now, if I go today or tomorrow, probably will. If somebody comes in, they give him 2 or 3 ounces, and then he puts them out, which he screws the people because let's check the price of it now, and we'll get back to Andrew McGuire. So if we look at gold price, so this was 26. It's been down. It's down 46 silver, but it was down like $1. It was down to like 20. It was down to like 25. Now it's back to 25.61. You can see the 10 o'clock hit on gold, driving it from 2050 down to 2000. It was down $50. Now it's back to 2014 on its way back to 2050. So he had no gold. So what he does is, if I bring in a regular ounce of gold, let's say it's just an Eagle, he'll give me 2014 for it because that's the spot price. But he's selling it for 2160. He's selling it like 100, maybe 120. Let's say 2140 he's selling it for. I think it was 2075, but that was so let's say 125. So he's 2150 on it. So he's only giving him 2014 and he's selling it back to you for 2150. I don't like that. I think that's wrong, but that's what he's doing. So I go in, I get 2,000, but then, if I go in to buy it, I'm going to pay 2,150. Now, in my world, it doesn't matter because the 20, I just want to get the coin at this price.
This is what.
All right. So with that said, we know it's coming to a head, and we know there's nothing they can do, and we know that it's BAS compliant or BA2 compliant, whatever it is. So now it's gold's an asset, and then the rules are changing where you have to, if somebody wants their gold, you have to give it to them. So that's changes. So let's go to let's start here. Why does it do that? Fuck, I hate that.
February 2021, it was a $30.35 highs. And once again, driven by strong physical demand and tight supply, into which, if you recall, we reported live that it was impossible, absolutely impossible to have obtained this much physical, and consequently the naked short SLV and COMEX short positions must have begun significantly increasing.
So he's talking silver right now. Let me go to all right.
$1 billion Belt and Road Initiative. And there can be no doubt at all that NATO countries have been caught wrong-footed now that China is facilitating the removal of the barriers between these historic enemies. And also Mexico is now far down the road integrating in the SCO.
So what he's talking about is all these countries that are getting out of the dollar, they're getting into BRICS. Nobody wants the dollar, so he's that. So this will move a little quicker.
These things are happening. And the glaringly obvious PSYOPs absence of any mainstream media mentions of this tectonic global FX pivot, or indeed their drip-fed attempts to even play down the significance of these impossible to hide trade deals by passing the dollar, it speaks volumes. And what it does do is to warn us to position ourselves accordingly. And while we've previously drilled down into the various components that drive these alternate safe haven flows, our focus is on how this ramped up de-dollarization process will affect the supply, demand, and ultimate revaluation of gold and all commodities increasingly being priced outside the US-centric paper markets. Now,
so what he's saying is, Bobby, you'll be happy with this, is that the prices are gonna go through the roof, is what he's saying. They got to be reset because they're not at physical. So again, I'll use Canadian Club. So basically what it says is if I go to Target to buy this, I couldn't even find it. Well, let's say it's $80 now. That's the physical price because I'm holding the bottle and it's physical to physical. That's the key. However, gold, you're not actually selling gold on COMEX, you're selling paper. Hence the paper term versus the physical term. So it's not like on COMEX or in the world to get to this $2,000 gold price, you're not actually selling the physical gold and somebody's paying you and you go, oh, that's the price because that's just like the Canadian Club. That's what it is physically, but that's not what's happening. You're writing all these derivative contracts, which are paper, and you're selling 1 million ounces that aren't there to somebody buying them on your team. And so the whole thing's crooked because that's not the real price. That's the paper price of we want to keep the price down. So we're going to write all these derivatives. And what he's saying is that's ending because people are buying them. As soon as they start doing that, people are buying them up because they want to buy the gold. And that's what he's saying. So I keep saying is once they get to that physical Canadian Club price where I actually have an ounce and somebody pays me for the ounce, the correct amount, not the derivative price. So when I go into the coin store and he's selling them for $21.50 for an ounce of gold, I laugh because I go, That's the COMEX price. That's not the physical price. So I get as much as I can eat. I'm at a buffet. I'm eating as much as I can because I know it's bullshit. And the silver price of 20, I got them for $30 yesterday, is a joke. That's not the real physical price. So I'm thinking ahead. As always, professor, I'm ahead of the game. I'm an INFJ. I'm trained to think ahead, and I just think ahead. And in my thought process, this isn't the physical price. This is the manipulated price. So therefore, I don't believe that's the price. I believe it's the physical. And all that's happening now is the physical price is about to come to fruition. And you just said, well, it's going to raise the price, ain't going to be anywhere near 30. Add a zero or two to it. Okay.
The Davos crowd to try and double down on efforts to ramp up military industrial war against, Russia, China. But Russia's red line was already crossed by NATO 1 year ago and already reached a stalemate that could at any point erupt into World War III. But if they also cross China's South China Sea and ultimately the Taiwan red line, it would commence an extremely ill-advised, unlikely too, military war between NATO and China, at which point, obviously, a hegemonic battle that the WF is anchored in will be lost much faster than anyone's factored it in, and they know that, so it's unlikely. And fighting a global
he doubts there'll be a war, is what he's saying.
The bulk of all the hard commodities with additional backfiring sanctions, bolstered by freshly printed paper dollars to offset them, will import massive inflation into the West. Now, I know Christine Lagarde recently estimated that inflation could rise by an additional 5% on top of current inflation positions. So, and then the story goes on, and it's rapidly evolving. However, more immediately, knowing either World War III is coming, or at best case, the unbacked dollar is ultimately going to be overwhelmed, as an action point, when making the choice to opt out of the dollar and all related fiat currencies, we must first choose what alternative to opt into. And obviously, it's gold. Obviously, it's silver. But as we've assessed, if you're thinking, oh no, I'll get cash. How about I hold some cash? Holding cash in a broken banking system is a high-risk trading decision. Nothing else. And at best case, this cash will be eroded by inflation, but worse, it can be bailed in without any notice. The only truly fungible currencies other than depreciating cash are gold and silver, plus 5,000 years of back testing proves it. So while the de-dollarization process plays out to its inevitable conclusion, we simply exchange these depreciating dollars for bought and paid for physical gold and silver while it's freely available. And I do emphasize, while it's freely available. And we've not even covered the plain vanilla bullish safe haven drivers for gold. While the general market is pricing in a soft landing, they're not factoring in the severe bank credit contraction, which ought to force the Fed to raise rates, but into the toxic, for risk but bullish for gold mix, an extremely wrong-footed Fed is aware that it was the aggressive pace of their recent rate hikes that triggered the banking crisis in the first place. And while Yellen, Jamie Dimon, and a host of spin masters busy this week talking their own book, have been wheeled out to spin the ongoing mantra that the banking crisis is under control, this disingenuously glosses over the very clear signals that the commercial real estate shoe is about to drop. And when it does, it will most likely provide the pivot to force the Fed's hand into cutting rates to avert triggering a far worse bank run. Drew.
So what is he saying? It sounds familiar, doesn't it? So who came first, me or him? Well, of course, me, but that's exactly what I tell you, right? What's your alternative? What's your alternative for this? And he says gold and silver, right? Yeah, that was the first part he said. Gold and silver is you just trade this, which is depreciating to zero, for gold. So I think he's listening to my show, actually. Goes to gold and silver. And everything else, all the money coming in is going to raise the inflation, which is going to lower the value of the dollar, which is going to raise the value of the gold and silver. And he's saying, so if you think you're keeping your money in the bank is safe, he says it's high risk because they're called bail-ins. What's a bail-in, professor? A bail-in's when the bank steals your money. And the bank says, professor, you got 10 grand in here, we're taking it. You can't take my money. Yeah, we can because it's really in our bank and we can do whatever we want. What are you going to do? What are you going to do when Hulkamania runs wild on you? You can't do a whole lot. So don't keep your money in the bank. You keep a little bit to pay your bills, whatever I'd say if you're working, I would say 2 months of your bills is what you should put in there. And then if you go on a trip, then, put it on the credit card and then pay the credit card like I did. I went to Spain. So that's really what you're trying to do is stay safe, right? But we're also going to make a lot of money because as this goes, gold goes up. It has to. They're doing everything to keep it down because of paper, right? The paper gold does. But in reality, the paper gold will fold away. And I got to look for it. I think he's got it on here. I just got to get the right minute. It's Werner's. I want the ginger ale for my foot. The ginger is very good for inflammation. But diet pop, not regular, but the diet's not great, but it's better than the sugar. So what we have here, you got to get it out. Now, what did I say when we started? I went to the coin store. There was no gold to buy. Now, people are going to come in with 2 or 3 ounces here and 2 or 3 ounces there. And so you just go in on a Saturday afternoon, or you go in on he's only open Sunday. He's closed Sunday, Monday. So people maybe go in on a Tuesday. So maybe you get there at 1 o'clock on Tuesday and hope he's got gold. And then how many ounces are you going to buy? Well, that's why I'm way out ahead of the curve. I bought 50 ounces already. If I don't get another ounce, it's okay. But because I started my new job and I'm going to make a good paycheck, now I can afford a few more ounces of a no-brainer of a 2150 of an ounce of gold that's going to $20,000, $30,000, $40,000. We don't know, but we know all the BRICS countries. Who's going to deal with Russia and China? Nobody trusts them. They don't even trust themselves. Russia doesn't trust China, and China. So the only way to be fair is to go on a gold standard, which means the gold price goes up because I need gold higher. Plus, a lot of countries want to pay off their debt with gold. Who doesn't have any gold? The U.S., Canada, and the UK. For some strange reason, these idiots do not have any gold because they're run by Keynesians who doesn't believe in gold, which is why we're Austrians, because we looked at the picture and we looked at the Austrians and we looked at the Keynesians and we determined the Keynesians are idiots. They're full of shit. And the Austrians understand, and they're the right team to bet on, right? So we're betting on the right team, the Austrians, and I got a master's in it. So I know what the fuck's going on. And I know the Keynesians are clueless. They just want to spend, and they don't want to have gold because that won't allow them to spend. And who was behind the U.S. in the 1930s? Who caused the Great Depression? Keynes. FDR had Keynes as his finance minister, whatever. And I'll find that in here and I will read it to you, which is why the Depression lasted 15 years, which is why we're even in a depression. We're the fucking USA. Why were we in a depression? Mostly to pay for the war because we wanted unlimited money. And then we did all these social programs like building the Hoover Dam, building roads to spend money to get the economy going when all you needed to do was get away, lower taxes, stop inflating, and let people go back to work. And then people will get stronger and make more money. And that is how the economy goes, by the people, which is Austrian economics. Anyway, so that's where we're at. And why I'm saying that is because good luck finding the gold. Now, silver he had, And at least if you can get silver, fine. And it was cheap price, was $30, which was great. And I bought 15 ounces of it. I already got 500. I bought another 15. I just gave Jenna, I think, 5 ounces when I met her in Spain. I gave her 5 and 2/4 of gold. And, I said, you're going to probably be one of the richest girls in the Ukraine, because I don't know how many are actually buying gold, especially girls like her. I mean, she doesn't have any money. And the money she has doesn't matter if it's Ukrainian hryvnia, it's not going to help her. But all of a sudden, the gold and silver she'll pull out, and she'll be a rich girl. So that's my way of being her guardian angel, like I'm Irina's guardian angel, and like I'm your guardian angel. I don't do it for any other reason, because I can, and I know what's happening, and I know what's going to happen. And I want to help. That's it. There's no, I'm not asking you for money unless you're football. That's different. All right, let's see where he's at.
Expanding interest rate differentials between the regional banks and the higher rate ballooning money market funds. And while the blinkered investors seem to miss is that these money market funds can, without notice, be gated, risking these deposits to be bailed in. And the Fed already has sight of the yet publicly unreleased Senior Loan Office Opinion Report, the SLOOS, which they know must reflect the seriousness of the yet to be factored in unfolding credit crunch. Obviously, that's not being published yet, but they have it. And while we are evidencing paper market inflows in both gold and silver to hedge this unfolding condition, it is the extremely strong physical market delivery demands that are underpinning dips in gold and silver, cementing a higher stairstep for both to rally from into the end of the second quarter. So very short term, just as we anticipated into the month end last month, we anticipate the obligatory volatility, of course, into FOMC non-farm payrolls as these inverse dollar to gold and silver algos influence the two-way non-sticky spec action. But dips will expose insiders to physical delivery. These are demands they're ill-equipped to actually provide. So dips will continue to be shallow and jumped on by competing central bank and sovereign physical buyers. So while gold and silver paper market actors are really largely sitting on their hands ahead of FOMC and non-farm payrolls, the 25 basis point hike is already fully baked into the markets, while the physical market looks much further out. It's locking in safe haven, T+2, gold delivery demands for delivery at any price. Okay, the only question left, guys, how much physical do you own?
Fucking A. So what he just said is that what is a bail-in? I think I just said, but we'll say it again, is basically when the bank takes your money. So the bailouts are when the government, so the bank loses $1 million, right? The government gives them the $1 million to make them whole. So here you go. Now you're back in business. A bail-in is when the government won't help them and the bank steals our money as if it's theirs, saying, well, we're taking the savings accounts and the checking accounts. We're keeping it. Now you have zero and you're going, wait a minute, I had 10 grand. Yeah, you did, but not anymore. You have zero. And that's when I did the Hulk Hogan thing. And that's the whole thing. So you now have zero in the bank. And that's what a bail-in is the bank takes your money instead of the Fed giving the bank money as a bailout. Don't believe that won't happen, because it will, because the FOMC cannot bail out all the banks that are going to crash. And don't kid yourself, they're all going to crash because they're all in the same boat. They all had to make enough money to pay off the people giving them the money. And they basically, the only thing they did was bonds. See, had the banks bought gold, they wouldn't be in this situation. But since they're not smart enough, and I don't really understand why, they are all defaulting, going out of business. A bunch of idiots. And it's the same with companies. If these companies aren't smart enough, and that's what when I work at a company, the first thing I tell the guy, I go right to the CFO and I go, "Are you buying gold and silver?" He looks at me and I just laugh at him, going, "Well, fuck you then. I'm buying it. You're going to be broke and I'll be rich. So thank you very much." I told the guy he'd be out of business by March. Maybe it'll be, well, now it's May. Maybe he's still in business, but it ain't lasting too much longer. And he doesn't realize that he's in the quicksand and he's fucked. All right, so let's see. I think the 28-minute mark. Well, let's go to the 26-minute mark.
OMC non-farm payrolls on Friday, but because this is when the episode will be released, so you'll already know that data. But we see insiders using dips to get positioned for a large Q2 rally. And as we discussed last time, the key level to overcome, the immediate key level to overcome,
this is silver.
and the current technical fight line to overcome is $26.22.
That's the silver COMEX price.
For a pit close or two, expect a very quick gap close into 35. And as we just said before, then you draw back to the much bigger picture that puts you right in the middle of where a huge short squeeze will occur. And we're going to anticipate the next rally at least to the $50 all-time highs, and that it's going to stair step from there. From there, we'll take it one step at a time, but looking at the aggregated supply deficits into the most undervalued commodity on earth, clearly
silver.
Higher. So speaking of the de-dollarizing process, Bloomberg now reports that the dollar share of reserve currencies has reached an unprecedented low level, declining from 73% in 2001 to 47% in 2002.
All right, so let's talk about that for a minute. So what he's saying is on the COMEX, the silver price. So the question was something about silver. Where's silver going to go? So on COMEX, when it hits 26.32, I believe he said, and it's at just about 20, closed at 26 yesterday. Once it hits 26.32 and it closes there, and then the next day, then it goes to 35. Then it goes to 50. Then we add a zero to that and it goes to 500. So that's what reality is. That's what the real physical world is. They can't stop it because now you have all these buyers in Russia, China, India, Iran, Saudi Arabia, South America, South Africa, Brazil, all buying silver. So when they lower the price to the 26, they're buying it. Before that, nobody was buying it, so they could play the fucking game and lower it down to 22 and get it down to 18, and there was no buyers. Now, when they lower it, there's buyers because everybody knows the cat's out of the bag. We need gold and silver to survive. The paper money is no good, and everybody knows it except for the people in America for some reason are too stupid to realize they want to stay in stocks and they want to stay in bonds and they're going to stay in the bank and the mutual funds and they're not going to get out. They don't get it. Everybody else does. So when they try to lower their price, when they do these little COMEX, short derivative, I'm shorting silver, which means I want the price to go down. Ain't nobody taking it. And they're buying it and then they're jumping it up. So the banks are getting their ass kicked because you're doing an option or derivative. You're saying the price is going to go down and I'm betting the price will go down and then I make money. Well, the price ain't going down. And what you're doing is a favor to these countries because they sit there going, this is great. I can buy it cheap. And they're buying it because they know it's the only way out of this is gold and silver. They get it. You get it. I know I get it. I've been getting it since 1995. So basically, that's what's happening, and that's why he's saying. So you're going to see it at 35, then you're going to see it at 50, and you're going to see it at a couple hundred, and you're going to see it at 1,000. So we're looking at the crystal ball going, hey, it's $1,000 silver. I can buy it. I just went and bought it for $30 because the fucking owner of the store is too stupid or feels he needs to sell it where everybody else is selling it for. Well, if everybody else runs this offense and pro football, we'll run it too. Why? Everybody, the defenses see it. They know how to defend it. You need something different. So that's what's happening, both silver and gold. They're about to explode very soon. As the dollar explodes, the inflation is going to kick it. So as you're ruining the dollar and as everybody de-dollarizes and says, I'm getting the fuck out of the currency, and as they get out of the currency, they know the currency's going away. They sit there and go, wait a minute, the currency's going away. I better get out, but there really isn't a good currency. But gold and silver is the currency to get into. All right, let's see.
But as we look into this second quarter of 2023, this US unipolar hegemonic global buying has bullying, actually, is what it is, has exponentially forced the ramp up of the scale of de-dollarization. So it's kicking back. And with Bloomberg also reporting that BRICS has drawn in bids from 19 nations, another 19 nations ahead of the summit. At best estimate, liquidity providers assess this share will have likely contracted. The share of the dollar percentage will have contracted to around 42%. With a consensus of just 33% by 2024. Well, this clearly exceeds all of the mantra that says this is going to go on for 5 years or more. And actually, Pepe Escobar rightly draws attention to the Russian finance minister, Anton Siranov's assessment that over 70% of trade deals between Russia and China are already using the ruble or the yuan. This does not account for direct Russian deals with India and a range of the other BRICS nations. Furthermore, as we've recently highlighted, the Chinese alternative to the SWIFT cross-border interbank payment system, the CIPS that we drew attention to a couple of times ago, is increasingly being utilized by nations seeking sanctuary from an increasingly weaponized dollar. So the BRICS nations already contribute 32.1% of global growth compared to Bloomberg's data, compared to G7's 29.9%. And this does not yet account for the very recent sanction-proofed and bridge, the sanction-proofed land bridge being removed between Iran, Saudi Arabia, the UAE, Turkey, Indonesia, which is the key plank to China's multi-trillion-dollar Belt and Road Initiative. And there can be no doubt at all that NATO countries have been caught wrong-footed now that China is facilitating the removal of the barriers between these historic enemies. And also Mexico is now far down the road integrating in the SCO. So, these things are happening. And the glaringly obvious PSYOPs absence of any mainstream media mentions of this tectonic global FX pivot, or indeed their drip-fed attempts to even play down the significance of these impossible-to-hide trade deals by passing the dollar, it speaks volumes. And what it does do is to warn us to position ourselves accordingly. And while we've previously drilled down into the various components that drive these alternate safe haven flows, our focus is on how this ramped up de-dollarization process will affect the supply, demand, and ultimate revaluation of gold and all commodities increasingly being priced outside the US-centric paper markets. Now, expect the Davos crowd to try and double down on efforts to ramp up military industrial war against, Russia, China. But Russia's red line was already crossed by NATO 1 year ago and already reached.
All right, we already heard that part. So basically, what he was saying is what's different this time? You guys have been saying gold and silver are going to go up. And then he's explaining it's all this whole Russia-China thing, the BRICS countries. That's the difference that's going to drive up the gold-silver price. That They don't want, now they're out of the dollar. See, before when they tried to do it, the U.S. would kill what the dictators. Fuck. I don't know. I can't think of them. There was two dictators. They tried to go on the gold standard, but they were little countries. Saddam Hussein and there was another guy. So they tried to like have money backed by gold to get out of the dollar, and the U.S. wouldn't let them. Now all the countries are getting together, going, "Fuck you! We're getting out of the U.S. dollar, and if you like it or not, what are we going to do? Blow up the whole world?" So that's what's happening. So that's what's going on with the money. It's about to go through the roof. I couldn't find any gold yesterday at my store that always has gold. Now, I can probably, if I go tomorrow, people will come and give the gold to get the money because they don't understand it's about to go to $50,000 an ounce, and they're going to cash their gold in at 2,000 thinking, well, this is as high as it's going, because they don't understand that's COMEX, not physical. We're waiting for physical to come, and we're just biding our time going, oh, we can buy more at 2,000, more at 2,000, more at 2,000, because soon you're not going to be able to afford it. Well, maybe Bobby, but the rest of us, it hits 30,000 an ounce. I don't know that I'm going to have that. However, silver should follow it. And where the key's going to be, and why I'm buying so much silver and why you should too, is because 10 ounces should buy you an ounce of gold. And so that means the ounces of silver should be going through the roof. They should be, at this point, 10 of them should be 200, right? 200 times 10 is 2,000. So they should be $200 an ounce. They're 30. I mean, that's how ludicrous this is. It's 10 to 1. That's the normal nature, how much silver is in the ground versus gold, and how much it was in Rome, and how much it always has been is 10 to 1. But they're price fixing it. So it's eventually going to collapse. And then your 10 ounces of silver buys you an ounce of gold. So I just bought a 10 ouncer, cost me $300. This is yesterday. I bought one 10 ouncer for $302, right? It's $30. So I'm going to take that $300 and turn it into 1 ounce of gold at $40,000 an ounce. That's how I'm going to pay for my gold, is with the 10 ounces of silver. So I paid $300 to turn it into 30,000. Now, anybody tell me where you can get an investment like that with zero risk? And that, I don't even know how much that return is. If you can find that, please let me know. But I have no risk. I do not have an ounce of risk. There's no way it's going down because it's priced in dollars and they're being inflated. And that means the value of this is going down, which means the value of gold and silver has to go up. It's being held down a little bit now. But as you heard, we now know why, and we now know that it's about to break because of BRICS. Therefore, it's not even an investment. This is not an investment. This is just moving your money out of this shit and moving it, taking this. So yesterday I took 300 of these and I bought the 10 ounce of silver. 300 of this, which is worth, what, $30 maybe? I mean, it ain't worth 300. It doesn't buy what 300 would have bought before. So they're playing mind games with you. You think you got a $100 bill, you're all excited, I got a $100 bill, and then you try to spend it and you go, fuck, I go to the grocery store, it costs me more. I can't, it's not worth anything. And that's really the point of it. Sorry, I'm just putting my ice pack on my foot. So that is really the point. And that's why we buy as much gold and silver as we can until it levels off. So if silver were at 2,000 an ounce, I probably wouldn't be buying anymore, because I've had the foresight to buy it now at 30, knowing it's going up. And yes, it's 50 years. It hasn't, but now it's breaking because of BRICS. So we understand Tom Brady's not at New England anymore, which is what I try to use as when he's on New England, and New England has all the trends. And then he goes to Tampa. You can't use the New England trends anymore. You can't use the COMEX trends anymore because it's changed. We have BRICS entering it. We have this inflation entering it. You can't use it. So anyway, that's the dollar. Buy your gold, buy your silver if you can find it. Like I said, he had no gold. Okay, I got 50 ounces. He had no gold. So you're fucked there. And then in silver, he still had some. So he had these 10-ounce bars. So I bought one and then 5 ounces of that. But that's probably what I'll be buying as I'm working, getting my paycheck. If he has 10 ounces of silver or whatever, although it will be going up to 35, which means it'll be like he already went from 25 to 30 for the ounce of silver. That's not the that's not the dollar. So once that goes to so when it goes to 35 an ounce, he'll be selling that at 40. He's 5 over. So that'll be sold at 40. That's fine, still affordable. When it hits 100, he'll be probably 105. Maybe he will just be at 100. I don't know. But okay, that's still affordable, but I'm not buying as much. Like now I go buy 15, 20 ounces like it's a joke for 500. What a return on investment I'm going to get when it hits 2,000. And wait until I can take 10 of them and buy an ounce of gold. Then really look out, because I can't wait to turn my silver into gold. I feel like Rumpelstiltskin. I can weave gold out of the yarn or whatever he did. All right, I think I've covered that, but again, it's very short in supply. My guy doesn't have gold. Your guy doesn't have gold. I don't know what JM Bullion and these guys, if they have it or not. If I could drive to my Ann Arbor store, I would doubt he would have it. He was having trouble back, a year and a half ago when I first started buying. So that's that. So let me go to. Okay, so my guy.
AG1 is so much more than a greens powder. In one single scoop, it delivers daily multivitamin.
Hello, health champions. Today we're going to talk.
All right, the absolute. I'm switching the topic because it's very important. Absolute best way to lower your blood sugar. So your blood sugar is high. You think you're diabetic, like the billions of people who are diabetic because they're eating sugar and carbs. And they don't realize that's what's fucking them up. So I think I can find. Let's see.
Is almost zero. And if we look at it visually in terms of carbohydrates affecting blood glucose, that would look like this big arrow.
So there you go, Bobby. Your carbs are killing you.
Smaller arrow and the fat arrow we can barely see. So if we want to put some numbers, then this would be about 70 to 100. The protein would be in the teens, so 10 to 15, maybe 20. And fat would be single digits, low single digits when we eat those by themselves. So in the short term, the greatest impact on blood sugar is the type of foods that we eat. But in the long term, the greatest impact is on how the different types of foods affect insulin. So the second factor that affects blood sugar is insulin resistance. And here's how that works. When you eat food, like we said, especially carbohydrates, then your blood glucose will increase because this food that you just ate has to be absorbed into the bloodstream and passed through the bloodstream into the cells. And the thing that helps, that makes this blood glucose get from the bloodstream into the cell is called insulin. And if we have the higher the blood glucose we have, the higher the insulin response. If we have mostly fat in the diet, then blood glucose barely goes up at all, and we barely have to have an insulin response. If we drink high fructose corn syrup in a soda, then our blood glucose is going to go through the roof very quickly, and then the insulin has to be very high in response to that. So in a sense, this insulin is pushing or even forcing the blood glucose out of the bloodstream and into the cell. And this is a good thing because that's what needs to happen. However, if we do that every day, like if we did it once a month, then it wouldn't be a big deal. But once we start doing it on a regular basis, now the cells start to resist having that sugar forced into the cell. They're saying, we've got a good amount, we keep getting more and more, but there's a limit. We've had it. Please back off. Stop pushing sugar in. So the cells become insulin resistant over time. And we'll talk a little bit more about this, that doesn't happen overnight. But now that the cells are insulin resistant, they're resisting the action of insulin, which is to get the blood sugar out of the bloodstream. When the cells are insulin resistant, now the insulin isn't working anymore, so we get higher blood sugar. So now we're stuck in a loop where...
So there's a guy at the hot tub who wears these patches for insulin, and he puts insulin into his system. And I told him to watch this, and I told him that it doesn't work and it's bad for him, and he just does what he wants. And now he wonders why I don't talk to him, because if you're that stupid, I don't have any time to talk to somebody that stupid.
amount of insulin to control that.
Now I've jumped ahead. How do we get it down?
Insulin, and we have a certain amount of glucose, and we're healthy, we're in balance, we're insulin sensitive. But then time goes on, time marches on, and a few years later, we go in, we get the measurements, and glucose is still good, but insulin has doubled. So now the body has to work twice as hard at controlling, at regulating, at keeping that glucose in that tight range. And if we only measure glucose, then we'll never find out. But if we measure insulin, we see, hey, it's something's changing. The cells are becoming more insulin resistant, so the body has to work harder. So then time goes on, and a few years later, now you take...
So what he's saying is, if you go to the doctor and you do your blood work and he only tests sugar, he's saying they need to test the insulin. That's the real key. And that's what most doctors do. They don't do it correctly. And you don't know you have diabetes because they haven't measured the insulin. So that's what they're doing.
And stop listening to the standard guidelines of eating low fat and high carb, because that's going to make the problem worse. It may work for a person who is athletic and young and insulin sensitive, but if you are insulin resistant and you follow the guidelines for how to eat, you will get worse. It will move you from pre-diabetes to diabetes. So the number one thing we want to do when we're going to lower blood sugar is to understand that it's primarily about insulin, because insulin resistance will drive up the blood sugar. Once you are insulin resistant, you don't have the capacity to regulate blood sugar and carbohydrates. So you have to cut them way back. But it is primarily about lowering the insulin so the body can get back to balance. And the most important thing, if you want to lower your insulin, is to stop eating sugar, because sugar is 50% fructose, 50% glucose. The glucose will raise blood sugar and drive insulin, and the fructose will cause insulin resistance by clogging up the liver and causing a fatty liver. And the next thing we want to do is to reduce overall carbohydrates, because all carbohydrates turn into sugar. When we break down the carbohydrates, the plant food, the starches, they turn into sugar. They drive up blood sugar. But that doesn't mean you can't eat any plant food or any carbohydrates. I believe that you should eat a lot of plant food. You just have to know which ones to eat. And what you want to eat a lot of are leafy greens and non-starchy vegetables, because if you eat things like broccoli and cauliflower and leafy greens, now they're mostly water. They'll have 2 to 3 to 4% carbohydrate, which is mostly sugar, but because there's so much water and there's some fiber, that sugar, which is a very small amount, also gets absorbed very slowly. So you can be on a ketogenic diet and eat many, many cups of non-starchy vegetables and leafy greens. The carbohydrates that cause the problems are the high starch. So we're talking about grains, potatoes, corn, etc. Those are the ones you want to avoid, but you can have a lot of non-starchy vegetables. And step number 4 would be to eat fewer meals. That's going to help tremendously, because what you're trying to do is to lower insulin. So one thing you can do is to eat foods that stimulate less insulin. But when you're fasting, when you eat no food, then there is no additional insulin. There's just like a trickle of insulin for your baseline blood sugar, but you're not putting any new food in, so there's no need for a mass effort to produce insulin. Another thing you can do to help out is gentle exercise. And you do want it to be gentle. A lot of people are confused here because they think it's all about calories. And they think if you burn off the blood sugar with intense exercise, then you'll bring it down faster. But that's not true, because when you do intense exercise, then you also produce cortisol, which raises blood sugar, because with intense exercise, your body is kind of in a state of emergency, and it's going to try to bring up the blood sugar with breaking down glycogen, with making new glucose through gluconeogenesis. But when you do gentle exercise, now what's going to happen is you're going to burn mostly fat, because with gentle, with a low baseline, you can provide enough oxygen, and when you provide enough oxygen, you burn primarily fat. You're still going to burn through some of the glucose, and it will help bring down the glucose, but you still want to stay in fat burning. And what happens then is that the muscles basically act like sponges. They're going to suck up the glucose from the bloodstream, because when a muscle is exercising, it doesn't need insulin. A muscle at rest requires insulin to get the glucose into the muscle, but when it's working, those floodgates, those portals open up anyway. And what happens with intense exercise is that you're not using more fat, but you're switching to more glucose. You always burn a combination of both, but with gentle exercise, it's more fat. With intense exercise, it's more glucose. And what happens then is that you create a need for the body. As you're burning through more glucose, the body will make more glucose. And because you put it in that sense of emergency, then you're also going to get cravings afterwards. And then I want to thank everybody who entered our Brain Tab.
So now you know why I fast for 72 hours and why I go to the pool and run and do little swimming and hot tub and walk the lake. Basically, I eat 2 meals a day and I fast 72 hours once in a while. That's all why. So you get a better understanding. I'm watching and then I'm learning and then I'm teaching you guys. So you really only want to eat 2 meals a day, maybe a snack in there, have a salad. Stay away from the carbs, stay away from the sugar, stay away from the high fructose corn syrup. That's what's making everybody sick, but nobody knows it. It's like gold, right? Nobody understands gold is the competition for money, and therefore nobody goes and buys it. And the same thing here. Nobody realizes I shouldn't eat Fritos and bagels and Coke and chocolate milk. And I eat it, they get fat, they get sick, and they wonder, well, why am I sick? Go give me some medicine. But the medicine is don't eat the sugar and don't eat the carbs. So that's what I try to tell you is stay away from the bagels and the muffins and the carb type of food that just you're eating sugar. Now it's okay once in a while, like I said, on a Sunday, it's the Super Bowl, it's your birthday. Of course, have a piece of cake. A one-off's not going to hurt you because now the next day you're back to your 18-hour fasting, your 2-meal day, and you're fine. And I have a Diet Coke on the weekend, not every day though. So that's really what you're trying to do. It's okay to have that one off. It's not going to hurt you too bad, but it's the everyday. You don't want to have a Coke every day. You don't want to have a donut or a bagel every day. I think we have a guy who eats the bagel every day. So we're trying to get him off of that. You can't eat it every day. Eat it on Sundays. So I just wanted to throw that in. So protect yourself with the gold. Eat healthy. It was a new one that I saw today. All right, so let's go to the NBA. And another big win for the professor. Golden State down 1-0, had to win. Lane 7 beats the Lakers 127-100. Sounds familiar? We did the same thing last year. It was a 50-unit lock last year over Toronto. They lost game 1, had to win game 2. And see, when you got a Steph Curry and a Klay Thompson and Draymond Green and guys that have been there before, they know they need to win, but they know how to win, and therefore they crush them. So they crushed the Lakers. So now what we have is, I think all the series are tied at 1. So we don't really care about game 3. We're going to get interested in games 4. So tonight, Friday, we got Boston now at Philly. The series is tied at 1. We don't know what to do tonight because we want to bet the loser back tomorrow. So Philly won game 1, Boston won game 2. Philly maybe wins game 3. We don't know, but we don't care. We watch this game. Now, whoever loses, if Philly loses, then we got to bet Philly game 4 because they'll be down 2-1. And if they go down 3-1 and have to go to Boston, so we're hoping for Boston wins tonight. We bet Philly in game 4. If Philly wins, same thing. Boston now doesn't want to go down 3-1, although they go home. If they're down 3-1 at home, we bet a ton on them. So it's 1-1. Today, probably, I don't know. It's really whoever loses this game is who you bet next game. And we got Denver, Phoenix. We've got Phoenix laying 4 against Denver down 2-0. This is a do or die game for Phoenix. I like Phoenix here laying 4. Again, they're at home. So what happened in Denver, and if you watch the game, Denver did this and Denver did that. But what you're really not getting is the game was in Denver, right? You got to understand the home field is huge, and it makes the teams look better, and the players play better at home. Well, that means the Phoenix players are going to play better in Phoenix. So I like Phoenix here down 2-0. If they go down 3-0, the series is over. They're only laying 4. I like Phoenix a lot tonight. So that's what you have. So take Phoenix tonight. We'll take the loser of the Boston-Philly game there, and then we'll take the loser of the Golden State Laker one. Now, I would say for you guys that like the strange bets to win the series, I would take Golden State to beat the Lakers just because they got the home games. Yeah, I know LeBron this and LeBron that, but at the end of the day, you got Steph Curry and LeBron can't guard them. So that's how I view it. So that is the NBA. We crushed the Golden State game yesterday, Professor. And now we like Phoenix laying the 4, and we'll bet the loser of the Boston and the loser of the Golden State series in game 4. And that's how you bet NBA playoff basketball. It's psychology. It's who loses needs the game. And you can see Golden State lost game 1, couldn't go down 2-0 and go play 2 games in LA. So what do? They blow them out in game 2, Professor. And so that's what we look at. It's everything's psychology. Women are psychology. Gold is psychology. Gold's incredibly psycho. Why don't people want gold? Because they're psyched out that it's not good, or that the government took the money in 1933. They're going to take it again. Well, it's not like you're going to give it up. Yeah, I mean, I'm not going to walk to the government and say, here's my gold, even if they did it, but I don't think they will. They're going to 1099 you instead, which is okay because it's only on certain amounts, and we'll figure it out when we come to it. We'll get the rules, and we'll figure out ways around the rules like we do everything else. But it's all psychologically, right? Why do you have a girlfriend or a wife, or you should have more girlfriends? Why do you eat certain foods? Picking the games, playing the poker, buying gold and silver. Why do you buy it and why don't you buy it? And it's all psychological. If you took psychology out of it, you would first of all have 3 or 4 girlfriends, because you wouldn't worry about, it would be a competition. So girl 1, and then here's girl 2, and here's girl 3, and they're competing. That's better for you. You want the competition. The gold and silver, why aren't you buying it? Well, you're competing with the bank, but you don't realize it. Well, I'll keep my money in the bank. It's safe. Is it safe? If they bail in on you, are you going to get your money out? I don't think so. You're going to trust the government? Don't you want to trust yourself? Buy the gold and silver and just put it in a safe and you're all set? So I don't know where. So it's all psychological. You're afraid of the gold and silver for some reason, or you think the price doesn't go up, or you think, I don't know what you think. I don't know. You can't lose on it. So I don't know what the fear is of owning gold. I can't understand that. It's such a no-brainer. It's like playing pocket aces. Like, you're not going to play pocket aces. You're afraid of losing with pocket aces. Like, really? So things like that. So it's all becomes psychological. Poker, gold, girls, food, betting sports. Betting sports, the biggest psychological is betting against New England, or betting on certain teams, betting against certain teams. That's the hard part about people. Roulette, it hit black 5 times in a row. What do I hear? Oh, I'm going to play red. Why? It's hitting black. Well, reds do. See, you don't even think properly. What you should do is stay on the winning horse till it loses. Stay on black till it hits red. But everybody's, I'm going to play red. It's due, it's due, it's due. Well, it's not due. It's never due, because they're individual rolls of the dice. It's just what's happening. Oh, the black's hitting when they throw the roulette ball. That's all that's happening. It's the same odds. It's just that's what's happening. It's not red's not due. It's black's hitting. So black, it's not anything due. They throw the dice. It's all whatever, and black keeps hitting. So I'm going to keep betting black till it stops hitting. I'm just going to play the streak, and that's it. And the same with women. She doesn't like me. She does whatever, and you just play it. That's why you have multiple girls, or girls, you have multiple guys. If there's a problem, you're fine. You just go with the flow. You don't need that. You don't need to be fucked over. Somebody fucks you over, you leave. You say, forget it. But you don't want to leave without the backup. So that's why you get out of, where am I going? I'm getting out of this. Well, I'm going to buy gold with it. So now I'm not just getting out into euro, I'm getting out into gold. And that's what you should be doing. And that's pretty much what you're doing. So we talk baskets, we talk gold. Who knows? It looks like the Ukraine is they're getting 300,000 Polish soldiers. I saw the headline on the YouTube, but I didn't actually listen to it. And you got to be careful. There's a lot of headlines that are on YouTube, and you listen to the video and they don't talk about them. And you're like, what the fuck? What the fuck are you talking about? But you don't show it in your thing. It's like when if I talk NBA, I'm talking NBA. I talk Warriors and Boston and Denver. I'm talking about it. I'm talking about gold. I went to the gold store. Here's our guy. So I hate when this is the new thing, and then they don't talk about it. You're like, well, what the fuck is your heading for? Then I find that a lot of people are replaying the video. So I'll see Andrew McGuire on 5 different channels talking about the same thing on all 5. I'm like, what the fuck is that? He's done his thing. So that's why I noticed some of them, like this Andrew McGuire that I showed you is new every Friday. And I get mad when he has these guests on that I don't want to hear the guest. I've already heard the guest. The guest doesn't know what he's talking about. I don't want to hear him. I want to hear Andrew because it's new every week. And that's the part he doesn't get is we already know what this guest is going to say. And we don't care. He doesn't know what he's talking about. So that's where we're at with that. But anyway, so I am back. I am starting work, I believe, Monday. I'm due to get the computer, it says by 7 o'clock today. So I will be here on the weekends for sure, especially when football starts. And we'll see how it goes. If everything goes according to plan, I'm going to try to work 7:30 to 4 with a half-hour lunch. And then I can do the show from 4:30 to, let's say, 5:30, and then go to the club and do my running in the pool in my hot tub. If I can. I don't know. We'll see. That's what I'm expecting. I'm very fast at my job as I am here, so I don't foresee more than that. I don't foresee working at home. They're going to make me take an hour lunch. The only thing is they're in Wisconsin, so they might want me to start later due to the time, but really nobody's going to hold my hand. Howard, we need you to do this, and then I'm going to do a budget or whatever, and then I'll just do it, and then here it is. So it's not like the manager will just say, when you're done, send it to me. So they don't normally hold your hand, and it's a remote position, so they realize that. So I could take a 2-week, 3-week trip in Vegas and theoretically work there, but really on vacation. So I'd rent like an apartment or rent a hotel for a month and just basically between 5 in the morning and noon be working. And then after that, go play poker and do the football and go eat and go enjoy and be back by 5 in the morning the next day. So theoretically, I could vacation. I don't know about Europe at this point. That would be a little bit of a stretch, but I might. But I could definitely go to Florida or Vegas or somewhere and work from the hotel. And they really wouldn't. I think in the beginning they want me to stay in America. But I think after, I would say 6 or 7 months, I could probably go to Spain or Amsterdam and work from there, which would be nice. So really, I could kind of tie my vacation in, even though I'm working, because it's remote. I don't have to be in my living room remote, as long as I'm anywhere. I remember at Mercedes, we had a guy who, now this is in Detroit, he moved to Wyoming. And so he was working in Wyoming. He says, well, it's remote. So he went to Wyoming and moved. He actually moved his house and he worked out of Wyoming. So, and I know what it is. So I can see doing that. What else? Football. Again, watched some key games. Richardson he ran a lot. He had a few completions, but when the guy's wide open and he hits them, everybody gets excited. I'm like, well, yeah, the guy's wide open. I expect him to hit it. But at the end of the game, I like Bennett. Bennett is a winner. I think the Rams got a good quarterback there, although they're going to be in trouble for a while. I think New Orleans, they've it was weird. They got Hayner, but they signed Carr, and they're both Fresno State quarterbacks. So I'm kind of confused what New Orleans is doing. And then Frisco, is Brock Purdy going to be ready? If he's not, they're in trouble with Trey Lance. So we'll have to see there. But overall, we'll start seeing come July, we'll start getting the pieces together, who's on what team and who's injured and who's healthy, and what's our offense and defense look like. The one guy from Georgia, I think Oliver or something, he was the best defensive player on the team, but he got hurt in the Florida game. So basically, will he be ready to go by September? But he'll be their best player on defense. He's better than the first defensive tackle taken. This guy's better than that. So we will see. So Philly's got it right. We'll just take Georgia defensive players. And it's as simple as that. And why these other teams are that stupid to not. Then I looked at the Iowa-Michigan game, and I didn't see Campbell being a first-round draft pick. I certainly don't see the Alabama running back being a first-round draft pick when you could have had the Georgia McIntosh, much better than this Alabama guy. And he went in the 7th round. So the Lions wasted the 6th pick with this Alabama running back. It was not even that good. He's not like he's Derrick Henry or anything. Then I heard, I don't think Ezekiel Elliott, did he retire or is he done? I don't know. And then Henry, where are they? So are they both still playing or not? I've had enough or what? I don't know. They've been 6-7 years in the league. You think they'd have another 3, 4, 10 years, but we will see. And that's the other problem. They make too much money now, so they don't care. Like now, they don't really try. You're not really getting a fair value. If you were to sign them, they wouldn't care. They're there for the money now, and it's a travesty. Baseball, they're all bitching about 2-hour games, and I don't know if the time clocks are making it 2 hours or what, but I remember watching in the 60s, Denny McLain, Bob Gibson, Koufax. They were 2-hour games, and everybody loved them. And I hear people bitching now, I wanted to spend 3 hours at the stadium. Well, I don't know who wants to spend 3 hours watching baseball. However, it should be based on the field, and you shouldn't change the rules to make the game a certain amount of. You shouldn't be playing the game for time. It's 9 innings. You play 9 innings. That's what should happen. But anyway, little bitches like that. So we will see. So you got baseball going on now. Who cares? Although I heard the Mets now have Verlander and Scherzer. They got the old Tiger team. And they got good hitting. So look for the Mets to probably win the World Series because it's all based on pitching. If Scherzer and Verlander stay healthy, they're obviously clearly the best 2 pitchers and very hard to beat if you let them pitch full 9 innings and not the bullshit pitch counts. So what else? NBA, we've talked. And then football, which we know. College football, there's I think 350 kids in the portal. I think it's 300 or is it 3,000? See, what I don't get is you had the choice to go play. Well, maybe they didn't. Maybe somebody wanted to play for Michigan and they didn't choose them. And so the beginning is, okay, I got to go to Eastern Michigan because Michigan didn't recruit me. So I didn't have my choice. And now I go in the portal because I really didn't want to go to Eastern or Western or Central or Iowa State. I really want to go to a different school. And the question is, will they claim him out of the portal? It looks funny because they're basically all being free agents, only if the team wants them. See, I don't think they can just say I want to go to Michigan. I think Michigan has to say we want them. So that's still going to make it difficult. And you got a lot of players leaving, and I think part of the problem is, yes, I want to go to Michigan. The other part of the problem is, well, I don't like the coach. I'm not playing. They're in for a rude awakening because just because you don't like the coach, they're pretty much all the same. They're pretty much very strict type of people. This is the way it's going to be. And that's the way all the coaches are. That's how you have to coach. So I don't know if they're going to find an easier coach somewhere if that's what their problem is, or playing time. If you're at Michigan State and you're not getting playing time, you're not getting playing time on these other teams. I hate to break it to you. That's not going to happen either. So not quite sure what they're looking for. Anyway, that's this portal. So it makes it hard for me because now it's like a new team, right? I want consistency. I want, Tom Brady, 10 years at New England, but I'm not going to get that. I'm going to get the jumpy and all these movements. And in college, it's going to be, college I'm kind of used to because I know I only got the guy for 4 years at best, and he probably doesn't start as a freshman. So I probably got the guy for 3 years, a sophomore, junior, senior. Like a guy like Cam Rising. I got him at Utah. Great. Penix went to Washington. Okay. Even Bo Nix, Auburn goes to Oregon. Okay, I got it. So really we got to see what's going on with that. But I find that to be a little bit, again, it's going to take 2-3 weeks to get and figure out offense and defense. And again, we're looking for strong defenses. Strong defenses will get you to your upset, right? The strong defense finds the upset, and you got to keep up with the injuries. Like Georgia, they lost their best player, and they started LSU. All of a sudden, the running quarterbacks had their way, LSU and Ohio State. And because the guy got injured. So you got to realize something happened. That's why they're giving up points. He got hurt in the Florida game, this guy. But that's what you're really looking at is that kind of play. And that, so you've got to come up with your design, and you got to be variable. You got to be able to change but you got to know what you're looking for. Fortunately, in football, we're looking for defense, and it comes like Washington State. We picked them up week 1 and go, fuck, they shut out Idaho, which now, but Washington State doesn't shut out anybody. We saw Kansas put up a 60 or 70, and Kansas doesn't score 60 or 70. It takes 3 games to do that. So you're picking up little tidbits along the way, and then you're seeing that it keeps going, and then you're going with it. So you're trying to keep your eyes open for everything that will help you. And Kansas was great. We locked them 10 weeks. We won with them. Washington State locked under. We won. Iowa State under every fucking game. Illinois under was very strong. So that's what you did. Ohio State actually was not an under. Their defense sucked. I'm telling you, their coach has one more year. He loses to Michigan, and if he gets into the bowl game and loses that, he's gone because he can't beat. He doesn't know how to beat Michigan. He doesn't know how to get defense. His defense 2 years ago sucked. Last year it sucked. He doesn't know. He's not a strong defensive coach. You can't win without it. That's what the guy did from Arizona State who went to Ohio State. His defense couldn't stop Michigan either. He lost 10 in a row or something. That's what's going to happen to this day guy. He lets Georgia put up 40 on him, and when they need to stop him, they can't. And Michigan puts up 45 on him without a very good offense. So what the fuck are you doing? So keep that in mind that this Ohio State coach he's on his way. I don't see how he's going to beat Michigan this year, and I think he's on his way out. That would be my guess. He's long gone. So, well, you can't see. That's the difference. If you can't cut it, they let you go. Not like these other schools that keep you around. All right, let's do a last check on our gold, our favorite topic. Silver's up to 2564. Gold's up to 2016. So gold started at 2050, went down to 2000. And from 2000, it's now up to 2017, let's call it. So it's kicking back. It's ready to go. And again, look, it won't go past 2050. It'll go past 2050. It'll add a zero to it. It'll be 20,000 and silver at 2565. Once it hits 2622 for a couple of days, goes to 35. And so that's why it's very close to hitting 35. So that's why I bought more silver yesterday, was to buy it at 25, so 30 versus 35 being 40. So I saved $10 an ounce yesterday by buying it. So keep your eye on that. I got to check on these Polish soldiers and in the Ukraine. Are they, like, is Poland now entering the war? And I know Israel, and what's the U.S.? Is this because of the gold-backed currency that Russia, China are doing? Because every time somebody's tried to do it, the U.S. has basically told them to fuck off. You can't do it. And it was Gaddafi. So Saddam Hussein and Gaddafi both got murdered for trying to come out with gold-backed currency to get away from the U.S. dollar. So look at the U.S. What a bunch of assholes. They're sitting there killing people because they want to go on a gold standard? No, it's the monopoly. You have to use ours. Who's the Dark Empire? Who's Darth Vader? It looks like it's the U.S. What a bunch of assholes. So I don't know. But I'm hoping the gold-backed currency comes out and we'll be rich people. So anyway, enough with JP Morgan and his bullshit. Tired of him. All right, everybody. I think that's about it. Bobby, have a good day. I will see you tomorrow morning-ish. www.teaserking.com if you want my email to talk about anything. But I think we hit pretty much our standard: gold, football, basketball, some food, some health, and then basically what's going on in the markets, the gold, Andrew McGuire on a Friday and stuff like that. All right, everybody, have a good day. www.teaserking.com. I apologize. Sometimes yesterday I took a phone call related to work, or my gal gives me a WhatsApp and she's in Europe. So she's going to bed. So I take it, but just trying to be a little flexible, everybody. I don't mean any issue by it. And please, thank you for bearing with me, but it depends what we're talking about, but in football, we pretty much stick to football, but I try to be short on it. All right, everybody, have a great day. Good luck. Have a nice weekend, and go buy your gold and silver and go find some gold. Let me know, because it's getting harder and harder. All right, take care.